Hey everyone, and welcome to The Explainer. So picture this, it's the summer of 2026, and Amazon just pulled off something absolutely staggering. I mean, a literal breakthrough that completely redefines the scale of modern tech companies. Today, we're going to unpack exactly how this e-commerce and cloud computing giant smashed right through the $3 trillion, yes with a T, dollar market cap barrier. Whether you're an investor, a massive tech nerd, or just someone trying to figure out the forces shaping our economy, you are definitely in the right place.
Okay, let's dive into this roadmap and see how we're going to unpack this together. 1. The $3 trillion club. 2. The engine, AWS and AI. 3. The massive cost of AI. 4. Success brings great scrutiny. And 5. What is next for Amazon?
All right, kicking things off with Section 1, the $3 trillion club, a historic market valuation milestone.
$3 trillion. I mean, just pause for a second and let the sheer scale of that number sink in. It is massive. On August 3rd, 2026, the market reacted to Amazon's latest moves with just overwhelming enthusiasm. We saw the stock surge 5% in morning trading, hitting a brand new 52-week high of $287.20. And when that closing bell finally rang, shares had settled at $284.02, officially pushing the company's valuation past this incredibly rare, historic threshold. And this really paints a picture of what it means to be at the absolute top of the financial world. Because Amazon is now only the 5th company in the entire history of the market to join this elite club, pulling up a chair right next to Apple, Microsoft, Nvidia, and Alphabet. This whole achievement was basically locked in following an incredible 23% year-to-date gain in their stock. But, valuations like this, they don't just happen by accident. Which brings us to Section 2. The engine, AWS, and AI. Q2 2026 blockbusters. Let's look under the hood at these Q2 numbers because they absolutely crushed it. Top-line net sales rose 20% to $200.6 billion. And operating income jumped a whopping 43%. But the real star of the show here is the net income. Wall Street analysts were only expecting earnings of about $1.82 per share. Well, Amazon delivered $62.6 billion, which breaks down to $5.75 per share. That is a massive beat, heavily driven by Amazon Web Services, or AWS, expanding at 37%. That's its fastest pace of expansion in 18 quarters, all while boasting an incredible operating margin of over 39%. Amazon CEO Andy Jassy actually hit the nail on the head when he said, AWS is booming. Our AI and chips businesses each eclipsed run rates of more than $25 billion. You can hear the excitement there, right? That simultaneous, explosive growth in both their cloud computing and their custom AI chip divisions is exactly why Wall Street was so hyped. They aren't just selling the cloud anymore, folks. They are selling the custom hardware that actually powers artificial intelligence. And just to act as your friendly translator for some Wall Street speak for a second, a run rate is basically taking current performance data and projecting it out for the year. So looking at AWS, they are now operating at an annualized revenue run rate of $169 billion. When you couple that with a swelling contract backlog of $496 billion, yeah, their future momentum is virtually guaranteed at this point. Moving on to Section 3, the massive cost of AI. Fueling the ambition. Now, what's really interesting about this is just how much it costs to build the future. Amazon raised its 2026 capital expenditure forecast to a staggering $220 billion. Compared to the $131 billion they spent in 2025, we are looking at an $89 billion jump in a single year. This insane increase is largely driven by two things: soaring memory chip costs, and the absolute breakneck speed at which they're racing to build out their AI infrastructure. Objectively speaking, though, a pivot this large creates some very real-world tension on a company's balance sheet. To fund these massive AI-driven capital expenditures, Amazon actually swung to negative free cash flow. They literally had to go out and raise billions of dollars through bond sales just to keep fueling the machine. It's a really stark reminder of the immense financial sacrifice it takes to stay on top of this global AI race. So how is the broader market taking all this spending? Well, it's deeply divided. On one side, you have Amazon and Microsoft being heavily rewarded for their AI spending. Investors are seeing clear returns. But on the flip side, companies like Tesla, Meta, and Alphabet have actually been punished by the market for their expenditures. Right now, Amazon is arguably the most emblematic consumer and AI story in the entire economy, proving that hyperscaler AI spending can genuinely pay off.
Section 4. Success brings great scrutiny. Navigating the legal landscape. As you'd expect for a company this size, the legal updates from Q2 are definitely a mixed bag. On one hand, Amazon scored a huge win, securing about $600 million in refunds following a Supreme Court decision regarding unlawful import tariffs, money they plan to use to lower store prices. But on the other hand, they're facing a proposed class action lawsuit in Seattle over alleged greenwashing, with some consumers claiming the company misled shoppers with sustainability labels on seafood. And finally, they lost a pretty notable federal appeals court ruling to the AI startup Perplexity. Regarding that Perplexity case, this ruling actually sets a massive precedent. The U.S. Ninth Circuit Court of Appeals overturned a ban that stopped Perplexity's AI shopping tools from being used on Amazon. The court determined that it was the users, the human beings utilizing the AI agents, who accessed Amazon's platform, not the AI company itself. As Perplexity put it, they will continue to fight for the right of internet users to choose whatever AI they want. This is huge for how agentic AI tools are going to interact with online platforms in the future.
And adding a little more friction to the mix, we also saw some big movement from the top. Literally just days after Amazon celebrated hitting that historic $3 trillion market cap, founder Jeff Bezos filed to sell 15 million of his shares, worth nearly $4 billion. It just goes to show how insider movements can still cause major ripples, because this filing alone temporarily dropped Amazon's share price by over 2% in early August.
Finally, let's wrap things up with Section 5. What is next for Amazon? Shifting from hype to monetization. So the overall market narrative has successfully shifted. We have officially moved from worrying about the sheer cost of AI to actually seeing visible, tangible AI earnings growth. Just look at Amazon's Q3 2026 guidance. They're projecting net sales to reach up to $202 billion, and operating income could hit up to $26.5 billion. The monetization of artificial intelligence is no longer just a theory, guys. It is showing up clearly right there on their balance sheets. And because of that, this sentiment on Wall Street is overwhelmingly bullish. Zacks Equity Research actually named Amazon their bull of the day, saying the company currently checks nearly every box investors should be looking for: accelerating growth, sharply rising earnings estimates, a reasonable valuation, and strong price momentum. In fact, this kind of enthusiasm led major institutions like JP Morgan to raise their price target for Amazon stock all the way up to $365. When you step back, the overall transformation is just breathtaking. Bolstered by a massive $35 billion commitment to OpenAI, alongside the booming success of their own custom AI chips, Amazon has fundamentally evolved its core identity. They are no longer simply the world's largest online retailer. They have firmly established themselves as a defining, undeniable force in the global artificial intelligence revolution. Which leaves us with this final thought. We've seen exactly what it takes to fight your way into the elite $3 trillion club. But as hyperscaler AI spending continues to accelerate, and as that massive investment turns into very real, visible monetization, who is going to be the first to win the race to $4 trillion? Think about it. Thank you so much for joining me for this explainer. Keep learning, and I'll see you next time.